Now, as widely expected, the US Federal Reserve has taken a wait-and-see approach to interest rates this month. US shares plunged on the news as the Fed gave no indication of when it might start lifting rates again. Hwang Ji-hye has the details.
Facing massive turmoil in financial markets, the U.S. Federal Reserve opted to hold its key rate steady on Wednesday. The Fed said it was closely monitoring global and financial developments and how they could affect the U.S. labor market and inflation. Yet the central bank gave little indication of when it will raise rates again. Last month, the Fed increased rates for the first time in almost a decade and suggested 4 more rate hikes this year. As investors were hoping for a stronger sign, the Fed might back away from future rate hikes due to plunging oil prices and the slowdown in China that resulted in a substantial sell-off in global stock markets. Wall Street dropped sharply on Wednesday. The S&P 500 closed down over 1%, while the Nasdaq dropped more than 2%.
And I think from an equity market perspective, where companies have been facing difficult pricing power, difficult global economic conditions, difficult domestic economic conditions, having a Federal Reserve that's not your cheerleader is just not well received, and that's why we're having the response we're having from the markets.
Asian stocks also took a hit from the Fed's statement. Korea's benchmark Kospi opened over 0.5% lower at 1,885.38 on Thursday. Hwang Ji-hye, Arirang News.